how to prepare for a market crash before it happens. Firstly, this is not meant to be a fear-mongering type video where the stock market is crashing right now and then I rationalize why that is happening. Instead, this video is a step-by-step guide on all of the actions I took to make sure that I can capitalize on the next market crash whenever that comes. There are only a few things that's absolutely certain in life. Market crashes, David loves dumplings, and you gently smashing the like button if you did learn something new in this video. As usual, if you really enjoy what I'm doing, consider supporting the channel via Patreon, and no, this video is not financial advice or recommendation to do anything. So without further ado, let's go. Okay, so I've broken the steps to prepare for a market crash in 3 main parts, and it's actually a loop. Everything starts with your income. The more you earn, the more you're going to save, the more you're going to invest. Now for me personally, as long as I don't inflate my lifestyle with Lamborghinis and a bunch of useless things, then the more I'm going to earn, the more I'll be able to invest. For the purpose of this video, we're not going to talk too much about how to save money because I think that most of us are pretty good at this part, as long as we don't throw our credit card in the air like we just don't care. What I will focus on is income and also investment portfolio side of things, the actions I took to prepare for a market crash.
See, everybody's got the brain power to do well in the stock market. The question is whether you have the stomach for it. That's the key organ in the body. There's always something to worry about.
There is always something to worry about. If I play you, the rest of that clip is gonna sound incredibly similar to what's happening today. Expanding money supply, inflation, interest rates, debt ceilings, there is always something to worry about. But what Peter Lynch said that really resonated with me, especially when it comes to investing, is that the key organ in your body is not your brain, but it's your stomach. Market crashes are inevitable in the future, but what is also very likely is our markets will be higher 10 to 20 years from now. So for me, to prepare for a market crash that will inevitably happen in the future, the first step is preparing how to stomach a massive market downturn. And this step is all about understanding everything I own in my portfolio back to front to make sure that there isn't anything I feel uncomfortable holding for the next 2 to 3 years. Let's jump into my portfolio just so that I can show you what I mean by that. So while we're in my portfolio, I'm going to do a portfolio update as well. The CMC market side of things is worth 99,000 Australian dollars. And I'll talk about my stake, my US portfolio in just a second. Now, you can see that I have separated my portfolio into 2 main parts. There is the value part and then the growth part. Now the value part of my portfolio is the foundation. I think of these as my starter Pokemons, if you will. And this is not going to change for the next 5, 10 or even 15 years. It's a place where I feel comfortable dollar cost averaging into them, whether the market is up, down or sideways. And I do that if I'm not building out individual positions like I did with Micron Tech recently. If you want to know how I've constructed my portfolio and the thinking that went behind it, check out my video on how to build a bulletproof portfolio, because in that video I documented my entire process and I made tons of references to Pokemon. So feel free to check out that video after this one. And what I like to do as part of preparing for a market crash is actually go through all of the positions that I hold, check the balance sheet, check the income statement, check the valuation to see if it's still something I feel comfortable holding on to them. And this is especially true for these individual positions like, for example, Micron, Novonix, Talga, Volpara. Do I feel comfortable holding on to them at least for the next 2 to 3 years? If the answer is no or kind of iffy and not a straight yes, I will reconsider my ownership. For the ETFs, I do the same thing. I look into what they're holding, what is my exposure to different geographies, and see if I feel comfortable holding on to them. If I don't feel comfortable holding on to them, it doesn't really help me stomach a massive drawdown. So this is part of my process to make sure that I know everything I own, and also I am willing to hold on to them during tough times. With my stake portfolio, it's worth around 44,000 US dollars, and that's give or take approximately 54,000 AUD. And I go through the exact same thing. I go through every single position just to make sure that, hey, I'm happy with the balance sheet, I'm happy with the income statement, and if there's anything I feel uncomfortable with holding on to them for the next 2 to 3 years, I will reconsider my ownership. But because I've done this exercise already earlier this year, everything I have left are all high conviction individual positions. So there isn't anything that I would essentially want to chop and change. So I want to give a specific example so you can see how I am double checking my own thesis to make sure I still want to own it. A really good example is Micron Tech. Now, Micron Tech is a semiconductor company that I am investing in for the purpose of riding on the semiconductor shortage tailwind. It's really important to know that Micron makes DRAM chips. DRAM stands for Dynamic Random Access Memory chips. They don't make the same thing as Intel and AMD. Now, I have built a very simple discounted cash flow model for all of us to try and experiment with. And this one is dated 11th of June 2021 for Micron Tech. And with the reasonable assumptions that I made, the expected return was positive over the next 5 years. And that was one of the reasons why I wanted to do more research and make sure that was a company I wanted to own. And it turns out that it was. Now, I have updated this model recently because of the earnings call, and the fundamentals definitely got better. The share price went backwards. It actually went from $84 to $78, and it was really confusing to me. But the whole reason behind it was analysts was concerned about the extra capital expenditure that Micron is spending to make sure that they can match demand. Nevertheless, I changed the fundamentals and kept the assumptions somewhat the same, and the expected return got even better. So this is one of the process I used to double check the valuation for the company. And I also did the same thing to financials, go to income statement, and I'm looking at, okay, is their EBITDA growing? Is their cash from operations growing? That is definitely the case, at least for Micron. And then I look at their balance sheet and look at, okay, what is the current ratio at currently? It's 3.4 times, which means that for every $1 of current liabilities, there is $3.40 worth of current assets. So they really don't have a problem when it comes to short-term liquidity, not to mention that the debt to equity ratio is incredibly low. So this is a very short process to double check all of my thinking again, just to make sure that this is a company I want to continue holding. It seems to me that we talk a lot about portfolio construction, but I don't think we're giving the earnings potential part of the conversation enough love. Because at the end of the day, I can only invest so much. And then after that, it comes down to how much I can earn every single month. And by earning more, it actually helps me stomach the market downturns a lot better, knowing that I'll have another opportunity to buy into the market with better expected returns. If you'd like me to dedicate a full video on how to boost your income potential, let me know in the comment section below, or gently smash the like button just so that I know that would be a great video to make next. But to not leave you hanging, there are 3 things that I did in my professional career and in my journey so far that have really boosted my earnings potential. And the first thing is leveling up my skills proactively via courses or mentorship. It's really interesting to me that some people will not upskill themselves until the company sponsors the education. To me, it doesn't make sense for me to wait for the company to sponsor the education, because if I get really good at my job, I would 10x the money that I spend on the education easily. And that is something that have continued to help with my professional career, even with this YouTube channel. And the second thing is you want to think about how you can leverage your time better, because when it comes to your job, your income is mostly tied to the amount of time you spend on the job. But if you think about creating a product, content, or even courses, these products can be used and bought by people across the world. That tends to create a scenario where the leverage on your time spent will be significantly higher. A good example of that is me creating a YouTube channel. It might take me 2 days to make a video, but this video is going to reach thousands of people. So the leverage on time spent is amazing. And the third thing is, given that you are starting to get really good at your job, or you are already good, go help other people or other businesses to do what you're good at. That's one of the most beautiful things about getting really good at your job, because other people will seek what you have and they will pay for what you can do for their company. So this could be a side hustle, this could be a consulting gig, given that you are good at your job. So what I'm trying to say with this video is that we shouldn't be scared of these inevitable market crashes. And the better or more well prepared we are for these crashes, the better we'll be able to capitalize on these once, twice, or even thrice lifetime opportunities. Thank you so much for hanging out with me all the way to the end. If you did learn something new, consider gently smacking the like button right there. Subscribe to my channel, click onto the bell so that when I release future videos, I can let you know. If you're still bored, I left a video on the screen that I think it's incredible to watch next. And as usual, Otto will always do the honors, and I'm gonna see you very, very soon.